Hi guys, Chris here for investingonline.com. Okay, so I've had a question or comment um, from I think it's pronounced Gung 7816. Apologies if I haven't pronounced that correctly. Commented on my last video on fuel. He says, "Could you cover JHX, please? Thank you so much." So I've gone and had a look at James Hardie Industries. So what do? They manufacture fiber cement building products used in home construction and exterior siding. So they're in the US, Australia, New Zealand as well. As probably some of the bigger markets. So I've just gone ahead and put some lines in there using the Northstar bad charts 5-star methodology, where we can figure out through a bunch of ratings whether the stock is going to break out and considered 5 stars, or could be the other way where it's actually becoming quite bearish. So before all that, we'll go through the 18-point year real estate cycle. This just helps see where we are in the current US land cycle. So if you want to know more about this, go to Property Share Markets Economics. I'll put the link in the description. And we're currently in the winter curse phase. So the peak is somewhere in 2026. Might be a little bit before that, could be a little bit after that. Why they call it the winter's curse? It's because it can be a curse if you actually say buying a property, say at auction, and you win the auction right at the current peak of the cycle. And if we go through a really bad downturn, and you might potentially have a lot of leverage or a large loan on the home, maybe you lose your job or particular difficult business conditions where you just can't hold on to that property, or you've lost a lot of value in that property as well. It's going to take some time to recover, and usually it's about 4 years of recovery. So that's helps sort of show you where we are in the cycle, and we're right at the peak. Okay, another good chart to look at is this US equity sector performance in regards to a high inflationary environment, and right now we are in that. And so James Hardie sits right where that sort of materials dot is. So right now, if you were to say we are in a high inflationary environment, that this particular company or this sector is not going to perform very well if you want to invest in it at this stage of way things are in the cycle. So it's not looking good just looking at that. In terms of how the chart looks, you can see here from its recent high in last year in September, it's broken down quite considerably. So it's below the 3-year and 1-year moving averages. It's below the cloud, which is a big support and resistance indicator. It's below what I consider to be the wake up line. So if it was to break past this wake up line, then it would start to be trending back up. But if it continues to be below this wake up line and actually gets to this final breakdown line, I would actually consider you could even short the stock, and it might have quite a big measured move further to the downside before it recovers. So it's not looking good to invest right now in James Hardie. If it was to come good, it has to get up through the cloud, past the 3-year and 1-year moving averages, past an early breakout line, and then past this all-time high here. And then you get a nice measured move above. But I'm thinking that's not going to happen until maybe when we start to get to the next recovery in 2020-30, so a few years away. Okay, so that's the chart, but let's have a look at how some ratios against some other indices, sectors, and underlying assets, and see what it's better to put your money to. So let's have a look at JHX versus the S&P 500. And so if the chart is trending down, you can see that it's better to be in the S&P 500 if it's going down. If the chart's going up, it's better to be in James Hardie. And you can see it's definitely better just to be in the S&P 500 against VAS or the ASX. Same sort of story. Against the US building sector, again, it's not performing very well within its own sector. XHB, which is a more broader US home builders and construction supplying sector, again, not performing very well within a very similar sector that it's in. Against the Aussie material sector, again, underperforming. Against wood, construction material input costs, starting to touch that wake up line there, but struggling. Against gold, so definitely gold's had an amazing run. Better to be investing in gold than the construction sector. Silver, again, silver is way outperforming. Let's have a look at, just for fun, Bitcoin. So actually a little bit interesting here. Let's actually put in this wake up line. See where this might fit best. So usually the wake up line, very steep sloping line that's sort of tracking if the moving averages are also very steep. We'll put this back to candles. And look, it's actually broken past that early wake up line, starting to trend back up. So that just shows you how, I guess, risk off Bitcoin is right now. It's almost like the last asset that you want to be in right now is Bitcoin. So materials construction with James Hardie's not performing very well, but it's actually starting to perform better than Bitcoin. So if I go back to the main chart, just to summarize. So James Hardie, it's below the 1-year and 3-year moving averages. It's below the cloud. So it's got a strong structural bearish trend. It's failed lower highs. So it's had an acceleration of a downtrend. The actual buildings material sector has weakens late in the cycle as inflation rises, which you can see. sitting in a sector that does underperform during high inflation environments. And you could consider a measured move, investing like an actual trade if it breaks this $17 line. If it breaks down there, I think it's going to move dramatically down before it starts to recover. Let me know in the comments whether you are considering James Hardie as an investment. I think it's got chance to go much lower before it's worth buying back again, investing in the next real estate cycle when we start to boom again. But right now, it's not looking good. Okay, put your comments in and I'll reply. If there's anything else you'd like me to cover using ratios or just how the chart of a particular stock or ETF or sector is looking, please put it in the comments. Till next time, have a good day.